Thank you for participating over here to our event. We're going to start in a few minutes. Let's wait that few traders will still join. It's going to be recorded, so we're going to put this also on YouTube after. For who doesn't know me, I'm Joseph. I live here in the Republic of San Marino. I'm a trader since, I think, almost 26 years, started in 1999. You can read my story, my bio, and how I traded since I was 17. I started, but 18, I was really trading full time. So before starting, today is going to be the explanation of what the market is doing right now. And I have a little surprise for you. So first of all, I want to tell you two things that for anyone that is new to my YouTube channel or Twitter or Instagram, here's the Wall Street Breakdown. What it's about? Well, we want to uncover what the smart money is doing. So the hedge funds, institutions, the algorithmic traders who move the market. And using the order flow, footprint charts, and also multiple tools in the room, we are able to do this. My background, a little bit about me, for who doesn't know me. As I said, I started in the Italian market. I earned a credential from Piazza Fari. I had different mentors there. I started Piazza Fari, which is the Italian stock market. This in the end of 1999, starting 2000. Was very young. And I studied also under experienced market makers. And I found that the foundation is very important, especially you have to know your enemy. Just like a week ago, I have a friend, he's a former market maker. I made a video with him on YouTube, so go check it out. And he was a market maker in futures back in the days for many years. And he was trading, for example, 3,000 contracts at a time on yes, okay? So that was pretty good amount of size. What we do daily in the trading room. So I have a trading room, which is online, and I have a trading academy, which is over here physically. For example, the background that you see over here is what we did in New York with one of our brokers. We had a 3 days live trading event, okay, where I was trading and also mentoring traders there in New York. So we create every single day a pre-market plan. I screen share my screen so you can see my trading strategy, which actually we built a trading system that gives you the timing of entry, that gives you the solution of the equation, so it gives you which setup to trade. And of course, you need always to decide when to take the trade or not, okay? So we made something that is not fully automated because I still want that, the remaining part is you. You have to have that little bit of passion, the little bit of I would say, adrenaline to take the trade. And that's also something that I love about trading. It's that part of fun. So I screen share, as I said, every single day. The setups, we don't trade, blindly. We trade according to statistics. So that's the reason why we use JTrader. So an app that we built together with JTrader in order to help the traders. We analyze who's in control. So where the big hands are, where the institutional are, and then we position ourselves. What are the tools that we use? So we use Bookmap, and every Wednesday we give a free webinar. The YouTube on Bookmap is going pretty good. We have 70,000 followers, so thank you for that. Also subscribe to the YouTube channel. And we have real-time scanners in the room. We have light charts, and also we have a good community of traders. There are some moderators who are full-time traders, much better than me as traders, and they provide help to new traders. They give insight, they share their trading. They are very consistent, and they do this for a living. And also they do webinars, so it's very good to see. Now, I don't want to lose too much time. I will present today what is the JLineSystem. So it's a system that I'm trading since a long time. And you can trade this on stocks like large caps, mid caps, and also small caps, futures, crypto, and forex. So you will see how this is designed. Now, thank you everybody again for being over here. So let's start together. Also, let me know, traders, if you can hear me good, and we're ready to go. So the first chart that I have over here is Tesla. Okay, so I'm taking examples, collecting some examples of the recent days. And I want to share with you over here. I mean, what would you think over here? Okay, I would think this is a pre-market. So now we see how it ended, but I will always trace the support pre-market. the resistance pre-market, so this resistance over here, this support over here, and then over here the gate. Once we have this push and rejection, okay, I will start taking the short. I will add over here, setting my risk above this previous support, now resistance 278. And then over here, you can see the price goes, okay, with an inside bar. I will then start shorting again and looking for, you know, this trend line to break for then reversing. So when you see the trend over here, it's about only the key levels, and it's about the price action. So when I say price action, what does it mean? It means a series of higher lows and higher highs, in this case, lower highs, lower lows, okay? You need always 2 consecutive bars in that direction to consider that a trend or a cycle, or sorry, a wave of Elliott, okay? So this is the chart itself. But if I apply this over here, okay, you can see everything different. So we have that same over here pre-market support. But then we have, okay, this over here, which is JLineSystem. This is part of the equation, okay? So this is what we call the 14 and 17 EMA, okay, on a 5-minute chart. So this over here is a 14 and 17 EMA. If you go, for example, on a 1-minute chart, you will see this as 72 and 89, okay? So it's based on the Fibonacci code. And once the price goes into, we have that resistance, we have the J lines, it's spiking, okay, that is the short it will take. And we'll place the stop above. And then you can see again happens over here. The price goes down, over here it simply breaks, and then we fill back again. So we have what? We have another trend line break, and again we have another short. And how to know that this is a short play? Well, first of all, we have a breakdown. So always look for a breakdown of a pre-market support, which is very important, or of a previous day low, okay? So you want to see the pre-market support gone and the previous day low, or the previous day low. This is the most important thing for me. Second thing is I want to look that these bars are actually red. So that tells me that the price is below the J lines, okay? And then I want to see these 3 bands. So J lines 1, J lines 3, and J line 5, okay? They are actually in the same direction. They're pointing down, and they're all like red over here. So red, dark red. This is the medium term J lines, and this is the longer term J lines. So until the price over here is red, I'm looking to stay short. Once you can see over here, the band is starting to become blue. And in this case, we start curling, okay? So we start cupping with the blue colors of the bars, then we can shift to the long side of the position. So we can see, traders, that what? We have a brand new system, which is trend following, which is trading the market is so good. And every single day we have repetitive setups in the room. Repetitive means that we have every single day a trade or NVDA or on Tesla or Amazon or Apple or an MSTR, AMD. Every single day we have one trade, at least one trade. So it's repetitive and it's profitable because it's back tested. Now I want to go over instead what happened, for example, over here on Tesla. This morning, we posted this alert, okay? So this is the free Telegram room where we post that watch list, okay? We don't give alerts in that room. We put the watch list. And then for the real trading, for the alerts, we have the trading room where, you know, I have all the traders and the moderators. But we said that this morning, okay, I write over here, bold Italian English, above 282, we go long, okay? Risk $1 per share, take profit 295, which we still didn't have. But the point was to get long at 282, so over here. Why? Because I was looking for this cup and I was looking for J lines, okay, to be pointing up. So you can see the 1 minute J lines above the 3, above the 5. So this is bullish. I was looking for the colors to become blue. I was looking for a pattern. I was looking at the momentum, and I was looking at the order flow and footprint to see where the institution were. As soon as we started the day, we had a big push in terms of liquidity, of volume over here. And I saw right away the push of really the institutions. Okay, they are pushing the market, not me, you, and other one of the traders that are buying, like, let's say, 1,000 share per each or 2,000 share per each of Tesla. These people are buying like blocks, and they were buying over here 280, 281. So we got filled at 281. I wanted to get a better feel around 280, but I couldn't. We got 281, and then we rode this until 286, where we had a volume divergence over here that you can see on the 1 minute, and we failed. Over here is the alert, and we were in screenshot also talking. So we gave the alert over here, long play 281. The target was 290, 300, which never came. So as soon as we came down over here, we get out with the position. And now over here, we gave another long play, okay, another setup like 15 minutes ago for this dip. You can see that we have a dip into the J lines. Over here is signaling blue, trend line break. Okay, this is your long fill. And again, we're looking again, or a stop over here, 283, or that push that I would like to see around 290. So the system is totally systematic. You already know what you have to do. And that's the point that I see a lot of traders. A lot of traders are trying to change system over and over. I trade a strategy, after 3 months, another strategy, after 3 months, another strategy, and they never are consistent. They never will become consistent because they change from time to time, thinking that it exists a system with 99.9% win rate. Nothing like that exists in the world, okay? Even the best hedge funds, the best coders, nobody ever found something like this as far as I know, okay? So what is important? To have a good system, profitable. Even good traders have 40% win rate or 35% win rate. The most important thing is that you have the profit factor, okay, or risk reward, like 1 to 5, 1 to 8, so that even if you win 40% of the time, but every single time that you win 8 times versus 1 or 5 times versus 1, you're going to be very, very profitable, okay? So don't focus on the 80%, 90% win rate. By backtesting, some of these setups on certain stocks work with 80% win rate, more or less, okay? But is, for example, only for a niche of stocks, is, for example, only for the stocks that are bullish in a certain market with a certain daily chart. Okay, so if you do a lot of tracking, you will find those. But if you want to trade, for example, every single day, looking for, a trade every day, one good trade every day, okay, then you have to follow a system like this, which is trend following. It's very easy to learn, and we're teaching this since already 2017. Now let's move on, because I want to share, for example, this pattern, okay? This pattern is a multi-day pattern. It's a trade that we took in the room on NVIDIA. And I'm going to explain over here how to analyze, first of all, the chart. So, the first thing that I do every single morning is I trace, let's say this is the day, okay? I trace the previous day high. In this case, we have this. And I consider the previous day high incorporating, okay, so including also the pre-market and the after hours. And then we put the previous day low over here, okay? So we have this. This over here is what we call the previous day range, which, as I said, includes over here pre-market, after hours, and the trading range, okay, of the day. So we have a resistance and we have a support. Now, the first part of the day, okay, the market, you can see that is bullish. Once we get over here after 3 p.m., okay, this is 3 p.m., we start having what? The color of the candles changing, so they're getting red. We have over here the band that is fading and becoming red as well. So we can start looking for a short position, setting our risk. This is what we call the late day fade, okay? Because it happens only after 1:30, after a major grinding day, and after this trend line break. And you can see that we go all the way down. So what about now finding, that perfect trade on the day 2? So remember that one of the things we said is that we trace the previous day low, which is this. So we're going to trace up till here, okay? Prolong it. There are even indicators. For example, the system that we trade is a complete template trading system that gives you already those levels on the day after, so you have to do nothing. And after the open, okay, so this is the open, this moment of open, we can see over here also we have another resistance, okay? And then once we have the open, you can see the price goes into the J-lines again. We start having like these stuffs below that pre-market support, so that is going to be our risk. And then we take again the trade. Even if the trade doesn't go for, 4 or 5 points, or only over here moves like 1 point, maybe 90 cents. This is still a decent trade that you can get out, even if you take with options, maximum to break even. So you will have a win or a break even trade. But you can see how the trade works. So remember, late A fade is going to call this. We have a morning grinder. And then once we start failing over here below the trend line, this is where you want to go short, okay? So it's easy because over here, you have to follow two main things. One, the trend, okay? And then you have to follow the colors and the setups. So we do this, and in the moment that we're doing this, we're using order flow and footprint. So to see where we have the majority of the volume traded, where you have the majority of the participants. So what does it mean? I will have, for example, with order flow, over here, it will signal me, okay, on a chart that I have a big hand, a big institutional, okay, that over here wants to sell around 114, 113 and 80. So once the price goes over here and then starts fading, okay, I'm going to short over here, risking that big seller. So the big seller over here is dumping, but it also has a big over here order to get filled, but it never gets filled. So what happens often? That he's going to move down. He's going to move down, and moving down the price and no buyers will tend the price to come all the way down. So that is the reason why a lot of traders that are not following these things, they cannot become profitable. Because if you don't have a read of the institutionals, if you don't have the read of the market maker, which now are under, I would say, an algorithm, okay, or soon AI, I mean, you cannot be having an edge in the market. So it's very important to notice these things, okay? I have to put over here my glasses because many years on computers, I became pretty blind. So for everybody who just arrived, this is the Wall Street breakdown. We're going to make this every week. I'm doing this for my community, but also I decided to invite traders out there to show what we're doing. As I said before, and then we'll continue. We trade every day. I share my screen, the execution, the trade orders, often share the broker statements that I do that day. And with this said, is not that the system is perfect, okay? But the system is giving good trades, and it's always trying to give small losses and big wins. Because like even in trades like this, the entry will be here. That is going to be the stop. But then all this range is going to be your profit. So we're trying to risk always 1 to at least have it 4, 5, okay? Sometimes we'll take maybe 2. Sometimes we'll take like 10R. Now, as we said, this works on small caps, large caps, futures. You can trade also on crypto and Forex. I don't trade the full year because I'm pretty busy mentoring and I have a trading academy over here. The photo that you see behind, as I said before, we were 3 days in Wall Street, then we were in Miami, then we were in Denver, then we were in Italy. Now we're going to have another live trading event between the 2 and the 2nd of June, so for 5 days. And also I'm going to be in a tournament, live trading in front 150 people in Rimini on the 23rd of May. So 23rd of May, if you're in Italy, come to Rimini. We're going to drink something together. I'm going to be live trading in front of a community of 150 traders in this meeting room, okay? And it's organized by 2 big brokers in Italy with whom I started trading back in the days, and also with Milano Finanza, the best newspaper of finance in Italy, and also is with Società Generale. I believe that everybody knows. So these are the sponsors, something very serious. So I will try to deliver the best, okay? Just the other day, we decided this, so I'm going all in, and they invited me to do this show with other 3 great traders. So NQ, why I put over here futures? Well, start looking over here. It's very, very easy to understand. The first part over here, the move, okay? This is from 11 o'clock, which is generally the time that I don't like to trade, especially futures, 12. I generally don't trade those 3 hours, okay? There will be days that I don't trade at all because I don't feel good, because it's a moment of my life that I'm not gonna be performing because maybe I have things. I didn't tell anybody, I'm telling you right now, the last 1 month and a half, I had almost my record. These 2 months were crazy. The 2 months before, I didn't perform good. So you're always a little bit different for various reasons. So what I like to do now is mentoring traders and showing them what to do, and then having traders over here with me. So in my office, often we are like 5, 6, even 10 traders at a time, and we trade together. But I will tell you this, what happened. This stock over here, I had a loss, okay? Because I was trading the Qs, which are actually totally the same as NQ, and I didn't respect the system. I'm gonna share over here. I'm gonna put the zoom a little bit, okay? So we're gonna look at this part of the chart. I was down at 4 figures over here, and I explain how. So this is a time that I said, first of all, I don't like to trade, and I traded, okay. Then over here, I saw this break, okay? So you can see that we had this cup pattern, and being that this was everything blue, we were curling, I longed over here. Right away, I said, fuck, Joe, you entered first of all late. The curl would have been over here. This is my risk. So as soon as I enter over here, I knew this, and I said, okay, I have to stop right away. So came down, it didn't stop. Came down, I added. So already made 3 mistakes. 1, trading when I didn't have to trade, trading a setup late, and adding to the position. And I believe that everybody of you at least did one of these mistakes, or even all together, just like me, one time, or even more time in your life. And what you have to do in this moment, try to refocus, try to see that you did a mistake, and get out immediately. What I did, I waited, it came down, and I stopped down here. So I stopped the worst possible trade. I stopped the worst. I took a big 4-figure loss over here, almost a 5. And then when I had time over here to get this perfect entry, this was finally my pattern over here. So you can see the scalp, everything blue, JLine's curl over here. I was checking it out. I didn't take it. This would have been 3 times my loss. Why? Because my exit was going to be this when we fail over here, the JLines. So not only I had a loss over here on the curl, over here, but also over here. The day after, things were a little bit better. I come over here again, focus. I start looking over here at the market. I saw this major resistance, and I know that futures often what they do, they fake out. So I saw liquidity trap. I saw the algos by by the institutions. Over here, I took a long position, okay, because this pattern that you see over here is what we call a morning star. So this is around a cup, but as a cup, but it's also a morning star. This candle over here means indecision. So as soon as you see this candle, start to think, okay, the market will reverse. And sorry, I'm drinking a little bit of American coffee, even if I'm used to Italian coffee. So that will be your entry long over here. Got a long, and over here I was making, some good money, around 60 points more or less. But I was trading the Qs. Okay, so imagine this in the Qs, same exact price action. This is futures. Okay, Qs are ETF, but they move the same. Came up, and I was looking. Okay, I said if we dip, guys, over here in the pre-market high, I'm gonna add more to the position. But once it dipped, what happened over here? I added. So now my average from here and here was around here. Okay, I added, and I was still full size, so I had even more. And I was expecting now the push. Instead, what I started doing, like fading. As soon as I saw that, I cut my position. So I cut the position, still being, okay, in the money. And then I said right away, because that is the important thing, try to change your mind from long to short, or short to long, in this case, long to short, and see these traps. Whenever we have a fake breakout, you're waiting for a rejection, and then you look for a short play. So over here, this is the first feeler that I got for the short, because we were breaking down the J lines, okay? So when I saw this, I'm gonna make it like this, okay? When I saw this team, I started taking a short over here. So you can see how we open and we fail. It's an anticipation of the system because the bars are still blue, but they are fade of color. Okay, so the color fade tells me that we can have a fade. We are still in the J-lines 1, 3, and 5. You can see bullish 1, 3, and 5. I explained these, how they are, and you can watch my videos on YouTube explaining this. And then over here, I started my position 1/3. But why I started? Because this was the setup of fake out. And I saw that it was a perfect scheme. It was a perfect play that is called liquidity trap by market makers, by institutionals. They had a fake breakout over here. So they made the breakout on purpose. And 1 or 2 big players over here, they simply start dumping down. There was 1 or 2 big players. So once I saw this, okay, now I start waiting for the colors, the bars becoming red. So I start adding a little bit. I start putting my stop loss. We had 19,500 was my risk. And then over here, I had a dip, got out partial, came back up. I still held. And then once I saw this breakdown, and over here, again, remember these bars, okay? I add a little bit more to the position. So this is what the system gave us. And then it was a huge win. So that win was able to recover the loss of the previous day with, a little bit more profit. So what I mean is you have, first of all, if over here I had to take the correct stop, I see something is wrong right away, cut it. Right away, you're wrong, cut it. Don't think about it. Hope things go good or not. Cut it. And over here, okay, so from long over here, don't be sitting on your position because you took a long play and this is a good long. No. The system is saying long, but once we are over here fading that pre-market high, fading that breakout, you have to know that this is a liquidity trap. And over here, at least over here, even before, if you recognize it earlier, these bars, get out. Don't think about it, get out. You made some money or you're losing some money, get out before you're having this, because this can be the outcome. And a lot of traders won't stop. Maybe they will add, just like I did over here the first day, that I added to the position before stopping out. And over here, if you do that, you're going to get killed because this stopped eventually, okay? And it came back up. But over here, we're going down. So this is going to be like your killer. So don't try to hold the position, cut it. In small caps, things are going very good. SST yesterday gave me a good win. And I explained what we did. So we share everything of this live. The open was here, and I also put on the socials in the room. Of course, in the room you could see it, but I put all the watch list, and I said, guys, or this, exactly like this, or this goes break over here, the $2 pop and feel short, and we're gonna go down, or if we hold the J lines, which is this blue, and start curl, this is my buy. You know what happened? First, we took the short. And then over here, all out and reverse for the position. And again, you can see the exact thing we saw before, okay? So this bar is a reversal bar. So if we connect this bar over here, number 1, number 2, number 3, it's called, again, morning star. It's a bullish reversal pattern. So when I see this into support, I'm looking to long play. And this was all covered live in the stream that we had with Bookmap on YouTube. So you could see every single moment what I was doing. And over here, we shared that we had a big heat map, okay? Now, we will make other webinars explain. I will bring a screenshot of these and we'll do some of this live. What is a heat map? Essentially, imagine there is a support of wall of buyers that are holding up the price. And if I start seeing this moving up, so forming another support, then I know that bars are actually looking to pay even more to buy, and they're waiting this to go up. So this came over here from around $2, and this I think was around 280, if I'm not mistaken. Yeah, around 260. Then it came down. Again, another J line. So you can enter again over here. You can see this pattern over here, right? This is, and again, another bar reversal. Over here, this is still a good play. It went up over here, 10, 15 cents, came down. And then over here, this is the mid-morning trap, okay? Everybody is expecting the price to go down. But again, you have to look at your levels. This is the low of the day. We're trying to hold the low of the day. And then over here, this is the open level. So you can see that we're holding that. And once we break this consolidation, okay, this is a narrow consolidation, and we start again changing from a long consolidation, all right? This is what Wyckoff would say. This is the long consolidation. This is accumulation. Because it's curling, you can see this is a cup. We're breaking out over here. So J-lines 5, J-lines 3, J-lines 1, the bars are blue, everything is curling. This is the long setup that we triggered. And then it came all the way up. And this was a 220 entry. And the last part over here, of course, you'll never hold until the top, okay? But it came almost to $4. So this was around 40% move in about, think like was 1 hour. Yeah, 15 to 16, 16:30. So like maximum 90 minutes. This was the move. First in the morning over here for about 60 cents. And then over here for about $2. Okay, actually, sorry, this was around 100% move, more or less. So an incredible move. But it's not only that day they performed like this. This was today. This was today. This is how we traded. I share today, first of all, in pre-market, how one of our guys took the long over here. This is at 4 o'clock open. He took the long and he sold it up here. Okay, and then it came lateral. Again, remember what happened the day before. Okay, this remembers today. SST is a small float, is a high institute, is a high volume, long consolidation. Again, expect after this long consolidation, the price or fails, or after the long consolidation, the price pushes. So after over here, after this consolidation, the price is becoming again blue above the 3 J lines. We had a long system over here. Okay, so I didn't put all the screenshot with this, but actually this is our system coded. So it tells us when to long. So this was after hours, of course, you cannot long over here. This was this morning. It's not that I see only this and will long it, but this, after the consolidation, is my A+ setup. It came over here, and then it made a first push. So this is the buy system. And then we have another one. Okay, we have another over here. And you can see this is how we traded. So I'm gonna explain so you can see everything we did. This was covered live in the room. So we longed over here, but before we shorted. Okay, so look at here. This is the short play. So when it popped over here, so let me check. 9:30. Yeah, perfect. So when we popped over here, the price. Let me see. This is a 1 minute. Okay, when we popped over here, it came down and it curled back up. 665. It's in the same bar, So when it popped over here, we shorted. Okay, so we shorted this level. You can see here, short, and then it dipped. As soon as we saw this dip, okay, where you can see over here that we have the cover. Okay, look on the screen over here. We have this cover up here. Then we watch for the curl. So the curl came over here into the 575. So at this point, exactly here, because this is a 5-minute bar, this is a 1-minute bar. At this point, we longed it. So we longed up here. Okay, not really buying the dip, but we waited a little bit of volume. We start selling to the push, and we sold everything at 6.50. It's 6.50 a little bit, and then more at 6.40. We started shorting, and then we start covering over here. This was a good 4-figure trade. We share everything we did. We broke this down in the room for members to learn. And what I see over here is two main things. One, price index tends to go back on small caps to the JLineSystem. It always does it, at least the first dip. So once this pushed, it always goes to the JLineSystem. Often it will bypass the VWAP and it will go back to the JLineSystem. And then when we had a push after, again, it came down over here to the JLineSystem. You can see 1, 2, and 3. So the 1, 3, and 5 JLineSystem. And then it started curling. Remember that curl that we always have. And then we start having the long play, another long play over here. And all these long plays, you can take them with very low risk. So if we long over here, okay, if we long over here is 6, 580, 590, so it's this point over here. I'm not going to risk over here 1 point. I'm not going to risk that support. You're not going to risk over here unless you're not looking to make, a 5R. I'm going to risk the small below the bar. So I want to risk like 20, 30 cents the max. And then if it goes up and I really take like 3R in a small cap like this, I'm going to take partial profit. And then when I see it doesn't work, that is coming back down, I'm going to take everything. And then what we did, we started shorting over here at 640. And we took the play all the way down to 5-ish. Okay, so 40, 50 cents above. And then like another, let's say, $1 on the short side. And that's all you have to do. You don't need to, many times I see traders that they have to think they have to pinpoint like this because maybe somebody is screen sharing or screenshotting a perfect trade that he took, maybe with 200 shares, okay? So don't think you have to pinpoint the entry over here. Sometimes I will do it, but I don't care. I want to see a little bit of confirmation. I want to see that we have an high and then a lower high over here. And on that lower high, we'll start entering short. So don't think, oh, I have to take the top. Because try to take over here the top. Every single one is going to be a new one. You're going to have a huge loss over here. What you can do, even over here, don't think you have to buy the perfect dip over here, perfect dip. Yeah, this is good. Maybe one day there's a tape at $7. So there's a big support you can buy. Maybe you have the order flow footprint signaling over here like exhaustion and capitulation. You can enter on the dip and then add more. But even over here, I want to see a little bit of push when it tipped the long. I want to see a little bit of like volume. So I don't care to buy over here. This is a cover, okay? This is not a long. This is a cover. And then I'm waiting over here to see that push to buy. Yes, I could have reversed over here, missed it probably. And then over here, didn't miss anymore. I was ready to long it and then short and reverse. So I was ready with my mind. And I was telling this to the members because it's one of the hardest things to do. Often we are so focused in holding the trade long or short that we forget that maybe the stock is reversing. So because we had a lot of small caps going, good morning, Steven. Good morning, Marco. Good morning, everybody, by the way. So we have this every Thursday. Please share with your traders, with your friends. They're going to be uploaded on YouTube. This is Jay. One thing I tell you, because in these lessons we'll talk about market makers, we had YouTube last week with a former market maker webinar. He explained the rules of the game. Okay, he was doing 3,000 contracts at the time in a trade. Okay, on ES, not on MES, on ES, 3,000 contracts at the time. So that's a little bit of volume. Remember, one contract, 1 point is $50. So imagine 2,000 shares, sorry, 2,000 lots. And he was telling us how they were like moving the market, how there were like 1 or 2, maybe 3 big players in the day. And together with order flow and footprint, especially on the futures, you can understand very good the algorithms. So there are people saying like, oh, no, it's impossible. No, I can tell you that we see it and we've been sharing this over and over and over. Okay. This is KTTA. So a lot of these small caps, why they run so much? Because they have certain parameters. Generally, they have the float, which is the most important thing they have to look, below 3 million. Sometimes they are below 1 million, so be very careful. Then they have high volume. And you cannot say a stock, oh, above, let's say a 5-minute chart, above 200K per 5-minute bar is a high volume. No, because every single stock is different. There's a stock of $2, $4, $6, $8, $10, $15, so on. So you have to simply categorize every single dollar stock for which amount that stock moves. So I can tell you that, for example, on a 5-minute chart, I want to see 1 million, even 1.5 million of volume per 5-minute bar in order for me this to be acceptable as high volume. But it's not going to be always like this. Maybe sometimes it's going to be 800, maybe sometimes it's going to be 3 million, okay? But this is a general rule. You can even scale this down to the 1-minute chart. Then I can tell that I would be looking for 250K plus. But again, one thing if you have a $1 stock, one thing if you have a $10 stock. On a $1 stock, I would like 400K per minute. On a $10 stock, I would like even 100K per minute is enough. Okay, so there's a difference. And then many of these, they have simply SSR on. What means SSR, short sale restriction? Means that you cannot actually short on the bid, so you cannot take liquidity, but you can only short, get out of the position or get short, adding liquidity on the ask. Okay, so when you have this, you put ask up, okay, you fill your ask, but the stock can go up because somebody is buying. You're not hammering the bid that is going down, okay? By the way, KTTA was one of these. At a high volume, as a nice, juicy, small float, and the first long happened over here. Now, this is an advanced setup. Is when we open. I shared the process on this, but I want to talk about this point over here. So this is the open, okay? The first thing that I want you to look at is what is the volume, okay? I can tell you the volume right here was above 1.5 million per 5-minute bar. So it was a high volume. And once we had the open, you can see the price open and it washed. So over here, everybody's going short. Everybody's going short. And those longs, let's say somebody bought over here on a support because it's normal, okay? But a support, boom, you're stopped out. So over here is another liquidity trap. When we know this is going to be a liquidity trap? Only when we reclaim the support, the 220, 219, 222. This is a liquidity trap. So market makers use this. Their algorithms know exactly how we're going to do things because they made the books of technical analysis, or we made it, but they absorbed that notions. So it's so easy to know, okay, those sport traders will short below 219. They will stop out the longs 219, 215. Let them trap. Let's let them trap, and then we rip the price up. They do this. And before they do this, I shared the whole process over here. I took a short. I came down a little bit, came up, but I short on the way up already, and I took a loss. And I remember that I was down over here with this small, I was down. And I said, okay, now the price, I said, it passed from being below this pink over here, this red over here band, it came over here to be blue. And I remember right away that I jumped in again long. And I said, guys, we have to take long over here. We came at J-Line's trap liquidity. We have to take it long. Took long. Loss was 1 hour. The trade was 8 hours. So that is where I want you to focus on. When you have these big moves, look for the micro float or low float. Okay, so below the 3 million. Look for the high volume. Look for whenever you have volume pushing, look for all these bars to be blue. And this, you can follow it. Again, you can put this already, okay? Just watch the free YouTube videos that I made about the J-Lines. There are 2 videos about the JLineSystem, all right? And it tells you how to code the J-Lines and other things. The blue bar is something that is going to come out soon on my website, so all the trading system. And then over here, we have this. Push up, came down, popped over here. So you can see that once we have the bars changing colors, over here, the J-Slim, okay, this is our algo over here that tells us, okay, we are having over here a top, get out on this bar. First exit, change of the color, lower low. You can see also that we break a lower low. Okay, so the system over here is telling me, okay, Jay, you know what? This is far from over here. The J-Lines can come down, and it came back to the J-Lines. So that's what we were saying before. So we have this push extension, and then again, back to the J lines. And when we have the backside, okay, over here, you can see the price over here, not the color of the bars, we're still faded, but you can see that finally over here, the bands are becoming red. This is the first time. So this is the short play you can take. And then over here, we will wait for another pop into here, and then we'll short it. Okay, so this is the best play for me to look. Okay, team. Let's go on. So we have another couple over here of plays. This was amazing. This is NQ. If you have a small account, trade NQ. I've been trading futures for 20 years. So this is really where I was born with, besides Italian stocks. So all European futures and American futures, I trade a long time. The system you trade on large caps is very similar to the trade, or mid caps is the same system that you trade on futures or in Bitcoin. So it's really easy to spot the good plays. They come almost every day. It doesn't really matter if you have a long experience. You can trade this even after 3 or 4 weeks that you study the system. So over here, the first part again, what do we have? This is the first solid supply. Okay, so up here you see a solid supply, and that tells me that between 1990 and 940 we have a solid supply. So we have sellers. The bands over here, the band 5, this one, the band 3 over here are red, so it's short. But on that 1 minute, okay, so the JLine 1, it's blue. So you have something contrarian over here, which is this blue bars and the blue band. But the 3 and the 5, so the long term is still bearish. And what happens over here? Once we have the trend line break, this is the first idea over here to go short. Okay? So the price is breaking down the J lines. I can start looking short. Over here, this is where I start looking for the short play. So after this bar, because now we have all the 3 J lines red. I have the price over here being red. The bars over here getting from faded to red color. That's my short, that's my risk. And then this. So from pre-market, this is 7:30, okay? So for who's in Italy like me, this is 1:30 p.m. That is your short play. So this is really, over here, this move is the only thing you have to do. This is 2 hours of work. 2 hours of work to make a paycheck. This is your paycheck, team. You don't have to trade all day. This is your paycheck. And then after the gate, you can see that it comes up. We have an evening star. And then again, the system over here on this bar gets you another short, another win. So, or this move, but you simply wait for these opportunities. And then let's go to the last one, okay? So this is a trade. I want to share with you a few things about, again, this is the short play, and this over here is the long play. This is the open. Open, it's holding J lines. We have our cup pattern. We simply set our long, we set our stop, and then we ride this with the J line. This is, for example, is your monthly paycheck. These trades happen 1 or 2 times a month, and they are beautiful because you can simply hold. So it's very easy to spot these. We took the 10 examples, futures, small caps, large caps, and mid caps in the last 7 days, just to share what the market is doing right now. Market is very fast in small caps, so you will see a lot of runners. You see a lot of stocks that are like pushing. So you have to learn also to long, not only to short. The second thing is that you have to wait for those days in future and large cap and mid caps. We have the break of the pre-market range and also the previous trading range, because those allow you to have the best trades. So trend following trades. There will be some irreversible, but look for the trend following trades. The market, it seems like holding over here, and I believe is going to be bullish in the next weeks, but we have to look at this. One more thing, team. As I said, we got to be here to the end of these webinars. If you like them, you can retweet also on socials what we made. You can invite your friends. You have 2 things. One is a gift, which is a beginner bootcamp. So beginner to advanced is a free course in 10 lesson videos. We explain everything from how to get the broker, to how to set your charts, to how have two trading patterns to trade every day. The thing is, you can have a trial for the room for $50 for 2 weeks, see what we're doing every day in live. We're there from 4 o'clock in New York time till 8 or 10 o'clock. There's always somebody trading or in the room. And then a yearly for 40% discount for $9.49, which is the best deal we ever made. So I hope that you like this. If you have other questions, please reach out to or my email team@JTrader.co or on Twitter or on Instagram or in Discord for who's in the room. Thank you very much, and good luck for your trading, and see you next week. Thank you.